What's going on, everyone? Welcome back to the Sartorial Wealth channel. My name is Shiraz Ahmed, and today we're going to be diving into the Bank of Canada's latest rate cut and its implications for the economy and, of course, the Canadian dollar, and not to mention your finances. The Bank of Canada has just cut its policy rate by 50 basis points, bringing it down to 3.25%. This is the fifth consecutive rate cut in 2024, totaling 175 basis points reduction for the year. Interestingly, the Canadian dollar strengthened slightly following the announcement, as markets speculate that the pace of future rate cuts may slow or even potentially pause. However, the Loonie remains down 6.5% this year, impacted by the strong US economy and divergent interest rate paths. The uncertainty surrounding President-elect Donald Trump's proposed 25% tariffs on Canadian exports. Now, Canada's economic growth has been slower than expected, with GDP increasing at only 1% in the third quarter and weaker projections for the fourth quarter as well. Unemployment rose to 6.8% in November, young people, unfortunately, and newcomers to Canada being particularly affected. Analysts predict that the jobless rate could average 7% in the first quarter of 2025. While rate cuts have boosted consumer spending and housing activity, these gains have been offset by declines in business investment and exports. Now, inflation is expected to stay near the Bank of Canada's 2% target range. However, wage growth combined with weaker productivity could push inflation higher. Now, temporary measures such as the GST holiday set to end in February are expected to briefly lower inflation to about 1.5% in January before it rebounds. Now, these fluctuations add another layer of complexity to Canada's economic outlook. Now, globally, the Bank of Canada has been one of the most aggressive rate cutters this year, outpacing the US Federal Reserve and European Central Bank. Now, this has widened the gap between Canadian and US interest rates to about 150 basis points, putting pressure on the Loonie, which currently trades at around Canadian dollar terms 1.41 per US dollar. Now, economists predict Canadian rates could drop to another 2 to 2.5% by mid-2025, but trade uncertainties and household debt remain significant risks for the Canadian dollar. Now, the Bank of Canada has indicated that future rate decisions will be made on a case-by-case basis, with the next announcement scheduled for January 29, 2025. Now, as we move forward, it's crucial to consider how these economic shifts may impact your financial strategy. Now, whether it's your mortgage, your investments, or your retirement plans, staying informed is key to navigating these uncertain times. Now, my obligatory disclaimer: as a licensed professional, this video is for informational purposes only and does not constitute any financial, investment, or legal advice. Always consult a qualified financial professional before making any financial decisions. All the data presented is believed to be as accurate as of the time of this recording. Now, I want to thank you for tuning in. Please don't forget to hit that like and subscribe and share your thoughts and comments. If you have any questions concerning how these changes might affect you, feel free to reach out to me directly. I'll put my contact details at the end of this video. Until next time, stay safe out there. Bye for now.